This video is aimed at smart individuals who want to learn. If this doesn't sound like you, I'd recommend you click off now. For the others, today we are going to answer the question, how does news influence Bitcoin's price? To do so, we will go through investor psychology and then go on to 8 news categories with a clear explanation and how each category affects Bitcoin's price. My videos aren't meant to be fun or entertaining, but to actually teach you something worth investing your time in. So if you want to take advantage of the next headline, let's learn together. Understanding how news moves Bitcoin is not optional, it is essential. In fact, markets don't move randomly, they react to signals you can take advantage of, and news is the most common trigger. Most investors don't know which news matter, how fast it acts, or why some headlines crash the market while others don't move it at all. Yet, they are still very significant. In 2023, Bitcoin pumped over 20% in 3 days simply because rumors spread about an ETF approval. In 2022, the FTX collapse caused Bitcoin to crash 25% because trust in infrastructures vanished overnight. Different types of news create different kinds of reactions, and without knowing how to read the signals, you are effectively walking blindfolded. Today, I will teach you the 6 core psychological triggers that drive markets' reactions and the 8 major categories of news that significantly affect Bitcoin's price. I will explain the psychological mechanism behind each type of news, whether the news is bullish or bearish, if it has a short-term or long-term impact, and for each category, I will give you examples to illustrate the theory. But I do not stop there. This video is segmented into chapters, and in chapter 13 of this video, I will give you an actionable takeaway so you can better classify each news when they come up in your day-to-day life. So before we talk about news, you need to understand how people react to it, because it's not the headline that moves Bitcoin, it's the psychology of people reading it. Here are the 6 key behavior patterns that shape how markets react to news. 1. FOMO, the fear of missing out. When prices go up, people rush in because they fear they might miss the movement and lose potential gains. 2. FUD, for fear, uncertainty, and doubt. When scary headlines drop, people panic and often sell even if the information is exaggerated or misunderstood. 3. Loss aversion. Humans hate losing money more than they enjoy making it. That leads to irrational selling even when long-term fundamentals remain intact. 4. Herding. People mimic what others are doing. If the crowd is buying, they buy. If the crowd panics, they panic as well. 5. Recency bias. Recent events feel more important than older ones. Traders often overreact to short-term data and forget long-term context. This leads to miscalculated behavior. 6. Reflexivity. Reflexivity means price and perception feed each other. When the price goes up, people get more bullish, which in turn pushes the price higher, reinforcing the narrative. These patterns are triggered by specific types of news. So now I am going to walk you through the 8 categories of news that move Bitcoin from least to most impactful. But first, let me congratulate you. 50% of people don't go past the intro because they think learning is too hard. Since you're still with me, I'm highly confident you're a smart person. Let's keep it up. First, let's introduce media narrative and social sentiment. This category includes influencer posts, viral threads on social media, hype waves on YouTube, and articles from legacy media. This type of news only impact the price of Bitcoin in the short term. It works because of FOMO, people don't want to miss the latest movement. Herding, people just follow because they think the crowd is right. And recency bias, as the latest news blind people from fundamentals. These stories rarely introduce new facts, but they change perception, and perception is enough to move markets in the short term. In 2021, Elon Musk added Bitcoin to his Twitter bio. That single action triggered a 15% Bitcoin pump in under an hour. This was a bullish news. On the other hand, when mainstream outlets publish Bitcoin crash stories, retail traders often sell just from headline fear. And so, even if fundamentals haven't changed, media narratives and social sentiment are important to understand because they can cause massive spike in volatility, pushing weekends out of the market. But this type of news isn't enough to change the long-term trajectory of Bitcoin. By understanding social sentiment, you understand when Bitcoin is oversold and when it's overbought, and this gives you the opportunity to enter positions more efficiently. Now, let's dive into the next category: market manipulation and liquidation. This category includes whale dumps, coordinated long and short squeeze, flash crashes from liquidity conditions, and order book manipulation. Those news are very short-term sighted, so if you have a solid plan in place, it shouldn't disrupt anything. If you are a forever holder, this won't affect you at all. This type of news works because of loss aversion from investor and herding behavior. Oftentimes, it will only impact traders who look at Bitcoin on a low time scale, as those movements are only noise on the long term. To be fair, these events often look like news-driven moves, but they are actually mechanical reaction amplified by fear. For example, in 2021, a major short squeeze during off hours caused a 4,000 BTC spike in under 30 minutes. But it can also go in the opposite direction. Flash crashes often occur after bad news, when bots and leverage traders overreact, creating cascading liquidation. This category isn't a type of news itself, but it amplifies the impact of news, creating exaggerated reactions to price action. If you're still with me, it means you're serious about investing, and you landed on the right spot because you're about to learn even more. Next, we are going to talk about security breaches and exploits. This category includes protocol hacks, wallet breaches, and malware events. Those news only impact the short-term trend and work because of FUD, people panic as they think crypto isn't safe, and loss aversion as people don't want to ride the downtrend. Even if Bitcoin isn't directly affected, the entire crypto sector tends to sell off when these headlines appear. In 2021, the Poly network got exploited and hackers drained over $600 million. This triggered a 10% drop across major assets, even though Bitcoin wasn't involved. Security news are always bearish as they break trust in the ecosystem. People often prefer to flood the market with fear rather than making their own research. But since you're watching this video, you're not part of the fearful ignorant. Stick with me because we are now entering the long time horizon. Exchange and infrastructure news. They include exchange collapses, withdrawal halts, bankruptcy filings, and exchange token crashes. This type of news affects Bitcoin in the short term and potentially in the midterm if crypto's reputation has been damaged. This category works because of FUD and herding behavior. When the platform people use to access Bitcoin are compromised, it creates a mass exit behavior. People get fearful, and rightfully so, as they might lose their holdings. I am sure you know about this bearish event. In November 2022, the crypto exchange FTX collapsed. Bitcoin fell from $21,000 to $15,000 in a matter of days. Liquidity vanished, trust in centralized platform broke down, and it only accelerated the ongoing bear market. As a rule of thumb, whenever exchanges are compromised, you can expect a downward movement in the short to medium term if the news is significant. Great, now let's enter the fifth category, crypto-specific internal events. This category is tied to Bitcoin's underlying technology. It includes network updates, forks and chain splits, bug fixes, and major developer milestones. This category can move Bitcoin's price in the short and midterm. FOMO, reflexivity, and recency bias are the most dominant psychology pattern that this crypto-specific news trigger. These events often stir strong emotions, not because of their immediate utility, but because of how they shape Bitcoin's narrative as an evolving and secure technology. In 2021, Bitcoin activated Taproot, its first major update in years. The price rose 13% purely by anticipation. The upgrade itself didn't impact functionality overnight, but the narrative of progress drove the move. But you have to be careful though, as updates are not always positive. Back in 2017, the Bitcoin fork that created Bitcoin Cash separated the community, creating uncertainty and caused a significant 20% drawdown in 2 weeks. These events don't always change the fundamentals, but they affect sentiment and cohesion. In Bitcoin, those two things drive reflexive buying and selling and can have a significant impact. Great, now we are entering the serious part. If you're listening to this, congratulations. Your time is about to be rewarded because the next three categories are the most impactful on Bitcoin's price. Let's dive into institutional and corporation adoption. This category includes public companies buying Bitcoin, ETF launches, bank offering Bitcoin custody, and major corporation integrating Bitcoin payments. Here it gets interesting. This category can cause short-term volatility, but above all, it affects Bitcoin's price in the long term. If you're looking for a 2 or 3x, this is the kind of news you want to look for, as they directly play on the long-term adoption of Bitcoin. From a psychology standpoint, FOMO and herding apply in the short term for retail investor, and reflexivity plays in the long term. These events do two things. They trigger short-term prices move, and they shift the long-term narrative around Bitcoin from speculation to strategic allocation. To illustrate this with a bullish example, in October 2021, the first US Bitcoin futures ETF launched. BTC rose from 57,000 to 69,000 in less than 2 weeks. As long as it doesn't compromise Bitcoin, institutional adoption has a significant positive impact on Bitcoin's price. Institutions don't just bring money, they bring credibility, but that credibility can work in reverse if those same institutions start exiting their positions. Alright, in this new category, we are going to talk about regulatory and legal news. This category includes SEC lawsuits, ETF approval or denials, tax rulings, and legal classification of crypto assets. This type of news plays a role in the short-term volatility, but it also shapes the landscape for the long-term adoption of Bitcoin. Regulation is a key long-term factor because for Bitcoin to be adopted, it has to be easy for people to get their hands on it. If governments start putting barriers between people and Bitcoin, the adoption may be slowed or even stop. This category works with FUD, loss aversion, and herding. In January 2024, the US SEC approved the first spot Bitcoin ETFs. Within 28 hours, Bitcoin jumped $10,000, confirming renewed institutional confidence. On the other hand, in June 2023, the SEC sued both Coinbase and Binance within 48 hours. Bitcoin dropped 7% in a single day as fear spread that the US crypto infrastructure could be frozen by legal uncertainty. This is an important news category because regulation controls access. If the government says you can't buy Bitcoin, large investors leave. If they say it is allowed, capital floods in. It is not about whether regulators are pro or anti-Bitcoin. It is about whether the rules are clear enough to move serious money. Good. We are now one step away from the tool I will give you to identify each news you see and act accordingly. But before, let me introduce the biggest news factor: macroeconomics and monetary policy. This category includes Federal Reserve interest rates, inflation reports, liquidity injections and tightening, US dollar strength, and global recession risk. Those news can make short-term shockwaves on Bitcoin's price action, but on the long term, it confirms or invalidates the bigger trend. On the psychology side, this category plays on loss aversion, reflexivity, and recency bias, as those are big news. This is the most impactful category, yet it is also the most overlooked by retail traders. Macroeconomics matters for Bitcoin because Bitcoin is now traded as a macro asset. It trades in the same basket as equities, gold, and tech that are driven by liquidity conditions and risk appetites. Let me give you a bearish example. In May 2022, the Fed raised rate by 0.75% and signaled more hikes. Following this news, Bitcoin collapsed from $38,000 to $18,000 over the following months, but interest rate can go both ways. In November 2023, the Fed signaled a potential pause in rate hikes. Bitcoin surged 17% as traders anticipated easier monetary policy. As a rule of thumb, lower interest rates are likely to make Bitcoin rise, and higher interest rates are likely to give the opposite outcome. Microeconomics sets the base layer of the entire financial system. Bitcoin cannot outperform if liquidity is evaporating, but it can fly when capital starts flowing back into risk assets. If you made it this far, you already understand more about Bitcoin's price behavior than most investors, but theory alone isn't enough. Let's make it practical. I promised an actionable takeaway, and here it is. I have built a 4-step tool to help you face new events called the News Filter. It is designed to help you quickly evaluate any headlines and determine whether it's worth reacting to, ignoring, or preparing for. Let's start with the letter N, for narrative. Ask yourself, what's the emotional framing of this news? Is it built on fear, hype, or legitimate signals? Media doesn't need facts to move price, it just needs a believable story. If the headline is designed to spark FOMO or panic, assume it's triggering a psychological response first, not a rational one. Always question the narrative before reacting to the headline. Letter E, effect. Next, ask yourself, is the news directly about Bitcoin or just about crypto more broadly? A new layer 1 blockchain launching is a high signal for Bitcoin, but a change in monetary policy, an SEC ruling, or a major ETF approval is a high signal because it affects the structure of capital flow. If the effect doesn't impact liquidity, regulation, or infrastructure, the market will probably ignore it in a few days. Next, we have W, for window of impact. Next, ask yourself, is this going to affect price over minutes, days, or months? Macro news and regulation typically plays out over longer cycles. Hacks, exploits, or tweets move fast, but they fade fast too. Understanding the time horizon helps you avoid emotional trades and misjudge timing. For the last letter, we have S, sentiment alignment. Finally, ask yourself, does this news align with current market sentiment, or does it contradict it? If the market is euphoric and bearish news drop, it hits harder because no one's positioned for it. If the market is fearful and good news appear, it creates short squeezes and fast rallies. Sentiment acts as a multiplier. You can't measure news in a vacuum. It only makes sense in the context. Every time a headline drops, take 30 seconds and run it through the news filter. It will help you cut through hype, avoid taking positions based on emotions, and understand when to take position and when to sit still. You don't need to predict the future. You just need to read reactions better than most investors, and this framework will help you to do exactly that. There you go. You have all the cards in hands to analyze news and position yourself accordingly in the market. If you stayed until the end, I am confident about the fact that you have a higher intellect than most people, and it is for smart people that I make those videos. If you want more educational content like this, subscribe to the channel and drop a like on the video. And if you want to continue learning, I'd recommend you watch my previous video where I explain in depth how cryptocurrencies gain value thanks to tokenomics. I'll see you there.